Hey Doc, Sean Duncan, SMD Consulting and Accounting. Let's talk about something super exciting, the estimated tax payment. Okay, it may not be exciting, but it is critical and affects whether or not you get a refund or owe money at the end of the year. So let's talk about it. But first, disclaimers. Okay, so the estimated tax payment, what the heck is it? Why does it matter? It actually applies whether you're a W-2 or a practice owner. So I do want everybody to listen on this one because it has some interesting implications. First and foremost, the measure of a good CPA is not whether they get you a refund or not. Because I actually have a surefire way that will always get you a refund. Ready? Write this down. Got your pen? Every dollar you make during the year, mail it to the IRS during the year. At the end of the year, you're going to get a ton of money back because you will have overpaid. Absurd, absolutely ridiculous. I know, but think about it. When you're doing, let's just say you have a W-2. When you have a W-2, they withhold money out of your W-2 for your taxes. And it's based on that W-4 that you fill out. Sorry for the jargon, all the numbers. But when you withhold, right? I'm claiming zero, I withhold extra, all those numbers. All that's doing is estimating how much money you're going to owe at the end of the year and sending it off to the IRS in advance as a prepayment. That's all it is. So if you're going to owe $100,000 of tax and during the course of the year you send in $98,000, guess what? You owe $2,000. If you send in $105,000, guess what? You're getting a refund of $5,000. Honestly, that's it. That's the game. That's all it is. So if I tell you that I got you a $95,000 refund, the IRS had your money. They had $95,000 of your money throughout the year. They didn't pay you interest. It wasn't invested. They just had it. If I told you that you're going to get a 0% return on $95,000 for a 12-month period, you're going to be kind of grumpy about that. Think about it that way. So the estimated tax calculation is not just for the business owner. It does affect the individual because the W-2 is the primary way of estimating. Now, there are circumstances where you might actually have to mail in more, and we'll talk about that here in a second. So for you self-employed individuals, still pay attention to me, W-2 folks, because I want you to pay attention to this as it might affect you in some other ways. When you are self-employed, you're not going to have the same withholdings. Now, we've talked about the S Corp versus the C Corp and the sole proprietorship. So the profits of your company aren't having automatic withholdings like a payroll would. So how does that money get into the IRS so that you don't end up owing a bunch of money? So let's do a little bit of rough math, keeping this super simple. I like the $100,000 number just to keep it round. If the profit from your practice is $100,000 and you're in a 25% tax bracket, you kind of owe $25,000. Don't worry about the brackets and the phase outs. I'm oversimplifying this on purpose. $25,000 is due. If you don't send any money in during the year, what are you going to owe in April or March, depending on your tax type? What are you going to owe? $25,000. Actually, there'll be penalties too, but we'll talk about that in a second. But if every single quarter you send in $5,000, that's $20,000 that was sent in. What are you going to owe? $5,000, right? You still owe $25,000. It's just how the money arrives as you go. The purpose of the estimated tax calculation, there's a form, the 1040-ES, and there's one for a C Corp as well, but we don't talk too much about the C Corps. If you want to, hey, we'll go into it. But it's the same math. You look at the profit of your business, you estimate your bracket, and you mail a check in using that form and voucher to the IRS for payment. And that prepays it so that you don't owe as much at the end of the year. Pretty simple, right? Now, how do you know that you're right? Well, it's an estimate. It's not perfect. Don't try to round to the fourth decimal place. If your spouse is an engineer, tell them stop it. We're not rounding to the fourth decimal place. Just an estimate. Nice round numbers are fine. It doesn't need to be $5,412. It can be $5,000. It can be $5,500. It's enough just to get it in there to get a ballpark because as it trues up at the end of the year. As the year is going, if you're working with a practitioner, we'll true up that last one a little more precise because we have a bigger picture of what your whole world looks like. Again, it's an estimate even at that moment. but it's basically prepayment. Why would you do this? Well, one reason is if you don't, the IRS will penalize you. Why will they penalize you? Well, they know historically if people don't pay as the year is going and then they owe a gigantic amount at the end of the year, your chance of default is much, much higher. It's harder to pay big bills. And so they know that. Then they know they're going to incur cost of collection and hassle. That's the business logic reason. The other is they don't have your money. They operate like a business. They need cash flow in order to do the things they need to do, whether you agree with it or not. They need the money to do the things they need to do. If they don't have the money, they have to borrow it. So they borrow it. So then they charge you. Go into this loop. It's the same thing that happens in your practice. If you don't have patients paying you, you got to tap the line of credit, which is why you penalize your patients for no-shows and not paying in time and collection sometimes. Not everybody does, but generally, this is what happens. So the estimated tax calculation is based on your profit and loss, based on as much of the big picture as you can. Now, if you have multiple businesses, it gets more complex and really, in all cases, I recommend a practitioner, or a CPA, an EA, somebody that's a professional to help you. But when you have a thriving plastic surgery practice, and then you've built a surgery center that you charge rent for and has other people, and then you've invested in this multifamily passive investment. Oh, by the way, you've invested in your brother's crypto business, and you're going to have all this stuff flowing in. It's no longer just looking at the profit and loss from your practice. It actually ties into a lot of other things and makes the calculation a little more complicated, but it's still an estimate game. How can we get to where we need to go? Now, a best practice strategy we like to employ, I like to overestimate in the first 3 quarters. So the first 3 quarters come around and we estimate and we pay a little bit more than we think we should. When it comes to the 4th quarter, which is due on January 15th, if we're working with someone, we do the calculation the best we can. If we've done it right, that 4th payment is smaller. I love it when I can hit the holidays and go, you know what? Let's do a smaller payment. And if you don't even have the money, you have the tax filing coming up really, really soon. So we do a really small payment and then you true it up on the filing. So we have a little bit of runway to plan for. So it's really one of those strategies. I like the end of year surprise that, hey, we're ahead of the game. You don't owe as much. Now, advanced strategy. I had a physician years ago. I had several that have done this, but this one in particular we had for a long time. He would never send his payments. He would always extend his tax return. He would then always file the business return on September 15th, day of deadline. We'd prepare it long ahead of time, but he would file it on the 15th. He would file his personal return on October 15th, and he still wouldn't pay. He would then wait for the IRS, take 4 to 6, sometimes 8 weeks to send him the bill, and there's this big penalty. And the dude would owe $100,000, $150,000, $200,000 every single time. And then the penalties were thousands of dollars and the interest. Now, that sounds awful. And I agree. It's stressful. It's awful. However, his theory was, I can take my $200,000 and invest it during the year, and I'm going to make more money than ever they would charge me. Okay. Now, that worked beautifully for years, and then 2008 happened. He got destroyed in 2008. He still made money, but his investments did not. And then he had to scrabble together. And 2009 was a little rough. And I know it seems like forever ago, but I still remember 2008 very, very vividly on how traumatic that was for folks. So then he took that money and that he had reserved and paid it off that way. So just so you know, it can be done. But the anxiety and stress associated with doing that for most of us, oh, I don't do it. And I'm a securities licensed professional. I'm not doing it because I want to make sure that I don't have panic and stress. That's just me. But just know that it is something that you can do because this is all just math. And this is what's so funny about what we do. We do a lot of coaching and a lot of business advice is just math, man. A lot of times it's just, I know what the number is going to be and this is what the deduction is and it can create a result. So the estimated tax calculation is extremely vital. Now, I mentioned I was going to talk to you W-2s, why this would apply to you. If you were a W-2 that has side hustles, of course, it's a business. Now we have to factor it in. But the other thing that gets missed is if you get bonuses. A lot of my physician practitioners will get kind of you eat what you kill. You've provided these surgeries and they give you a bonus on your W-2 based on the stuff that you're doing, whatever the procedures you're doing, and they give you a bonus. If it is categorized as a bonus, most payroll systems have a default rule that they'll withhold something like 25%. So they'll withhold and send to the IRS. What if you're in a 37% tax bracket? They withheld 25%, but you're in a 37% tax bracket. You were immediately short 12%. Congratulations, you're going to have a surprise in April. So if you know that's how you're compensated, you might withhold extra per paycheck. That's fine too. You might request of the HR department to change it to the 37%, and a lot of them won't. Just so you know, they won't. Or you might have to mail in some checks. So just keep that in mind. It does affect you, and it's one of those ones that, like, it's that little shocking surprise that people can't understand why. And the other reason is if you change jobs. If you go from one practice to another practice, the new practice does not know about your compensation from the first practice. So if you were already at the 37% bracket over there, your first paychecks are going to be withheld as if you only made $50,000 this year or $100,000. They're going to withhold at a lower amount. So sometimes when you change jobs, the second job under withholds because they don't know and don't factor in the math and won't factor in the math because, come on, imagine if you're the person doing the payroll, you don't want to have to track this stuff. It's too much work. So just know you're responsible for that. Estimated tax calculations are not fun and exciting, but they are critical to helping avoid the shock in April when you owe the money, or the shock in, oh my gosh, they had how much of my money for the whole year? Could I do this more efficiently? Yes. It's always going to be a ballpark and estimate game, but I would rather you control that than to just say, I hope this works. And if you think about it, how often do you pretty much look at your tax return going, I hope I get some money back? That means you don't have control of it. I would rather you have control. So hopefully that was helpful, fellas and ladies, and everybody else that's out there. I hope that you have questions. If you do, let us know. Sean Duncan, SMD Consulting and Accounting.